Hey everyone, it's Jefferson here, and I've got a huge update for you today. The financial world is experiencing massive changes, and you need to know what's happening right now. Just a few hours ago, the Federal Reserve announced that the 2025 rate cuts that many were anticipating won't be happening. This news sent shockwaves through the financial markets, and you could be wondering, what does this mean for your investments, your home, your future? Well, in this video, I'm going to break down everything you need to know about the Fed's decision, the market's reaction, and how you can protect yourself going forward. This is not a drill. The markets are starting to show signs of trouble, and if you don't take action, you could be left behind when the financial chaos starts. If you're an investor or someone just concerned about your finances, this information is crucial, so stick around. Let's talk about the Fed's announcement. The Federal Reserve was expected to cut interest rates in 2025 to continue stimulating the economy. The theory behind cutting rates is simple. When interest rates are low, it's easier to borrow money, invest, and purchase goods like homes. But instead of cutting rates as expected, the Federal Reserve decided to hold them steady. More alarmingly, the Fed has indicated that fewer rate cuts will take place in 2025 than initially projected. This is a big deal because interest rates affect everything, from the cost of borrowing to how much you pay for a home to even the value of your investments. When the Federal Reserve takes action like this, it signals a shift in the economy, and that can have a ripple effect on markets, jobs, and even your own pocketbook. Here's where things get interesting. We are also dealing with inflation, which has been consistently above the Fed's target of 2% for some time now. This puts the Federal Reserve in a tough spot. They can either focus on controlling inflation or stimulate the economy further. The problem is, inflation remains persistently high, and consumers are starting to feel the pressure as prices for basic goods rise. Now, here's where it gets complicated. As the markets, like stocks and real estate, have been thriving, and Bitcoin and other cryptocurrencies have seen major increases, this is when we have to ask the big question: are we heading towards a bubble? Let's think about that for a second. If you look at the stock market, housing prices, and even Bitcoin, they're all at or near record highs. But if we're being honest, can these trends continue? The answer is probably not. When things get too good to be true, they often are. And that's what's starting to worry a lot of economists and market analysts. We've seen this story before. In the 1929 stock market crash, the dot-com bubble in 2001, and the housing bubble in 2008, all of these were preceded by unsustainable growth in the market. In each case, people were overconfident about the future, pouring money into assets that were overpriced. And in the end, the bubbles burst, and many investors lost everything. Now we're starting to see similar warning signs. The stock market has surged by more than 30% this year, and experts are warning that this could be unsustainable. If we look back in history, there have been only 9 times when the S&P 500 saw returns greater than 30% in a single year. And while that sounds like a great thing, it doesn't mean it's going to keep going. We're seeing valuations in the market that resemble the dangerous conditions we saw in the past before major crashes. One of the most famous metrics for tracking this is the Buffett indicator. This measures the total value of the stock market relative to the GDP of the US. It's a great gauge of whether the stock market is overvalued or underpriced. Right now, the Buffett indicator is at 208%, which means that stocks are trading at prices that are much higher than historical averages. And when that happens, investors are essentially playing with fire. So, what does this mean for you as an investor? If you've been investing in stocks, now might be the time to reconsider your approach. The stock market is likely to continue fluctuating, but it's hard to imagine the 30% returns continuing for long. Even though the market may seem like it's still growing, it's highly likely that we will experience sharp corrections in the near future. The market can remain irrational for a while, but the question is, will you be able to ride out the storm? But let's talk about Bitcoin. Bitcoin has recently hit new highs, and there's a lot of excitement surrounding it. It reached the milestone of $100,000, and many are wondering if it will keep climbing. Cryptocurrencies are still volatile, and no one really knows where they're headed next. Sure, Bitcoin could go higher, especially with institutional players like Microsoft and Amazon starting to show interest in it. Bitcoin is definitely an exciting asset, but it's important to approach it with caution. If you're investing in Bitcoin, make sure you're doing it as part of a diversified portfolio. You don't want to go all in on one asset, especially one as volatile as Bitcoin. Be prepared for massive swings in value, both up and down. And don't be tempted by the hype surrounding Bitcoin. Remember that it's still a speculative investment. Moving on to real estate, the housing market has been a strong performer as well. While home prices have surged in many cities, the cost of mortgages is also rising. With interest rates at their highest levels in more than 20 years, home buyers are finding it more difficult to afford new homes. If you're looking to sell your property, now might seem like a great time. But if you're thinking about buying, be cautious. There are still some areas where home values are rising, but other regions are starting to cool down. Cities like Detroit, Chicago, and New York have seen impressive gains in home values. On the flip side, Austin and San Antonio have been hit by declines, with prices falling by 3% to 4% over the last 12 months. The key to navigating this real estate market is doing your homework. Don't jump into the market without thoroughly understanding the local conditions. For real estate investors, this is a great time to consider rental properties. While home prices might be on the rise, there are still opportunities to find properties with strong rental yields. But be mindful of the fact that interest rates could affect your mortgage payments and your cash flow. The key here is to invest in properties that generate income, not just properties that are appreciating in value. In times of uncertainty, cash flow is king. The real estate market isn't the only area that could be affected by this economic uncertainty. It's also important to think about diversifying your portfolio across multiple asset classes. If you're heavily invested in stocks, real estate, or Bitcoin, consider spreading your risk out across other areas, such as bonds, commodities, or even gold. It's also a good idea to have emergency savings on hand. The last thing you want is to be caught off guard if the markets take a sudden downturn. Another critical step is to consider speaking with a financial advisor. If you're unsure where to place your money or how to protect yourself from the risks ahead, a financial advisor can help you make better decisions. They can offer a fresh perspective on your portfolio and provide guidance on how to weather the storm ahead. Don't wait until it's too late. Start planning now. In uncertain times like these, it's always a good idea to maintain some cash reserves. Having cash on hand gives you the flexibility to take advantage of opportunities when they arise, whether it's buying a discounted stock or investing in a rental property. Experts recommend having at least 6 to 12 months of living expenses in liquid savings to ensure that you can weather the storm and keep your financial plan on track. In conclusion, the Federal Reserve's decision to cancel the 2025 rate cuts is a major turning point in the current economic landscape. While the markets may continue to grow for a while, the risks are becoming increasingly apparent. Diversifying your investments, staying informed, and consulting with financial experts are critical steps to ensure your financial security. It's never too early to start planning for the future, so take action now. The markets may be unpredictable, but with the right strategies, you can protect yourself and even capitalize on future opportunities. If you found this video helpful, make sure to like, subscribe, and hit the notification bell so you can stay updated with more urgent financial updates like this one. Click the like button and subscribe to the channel for more updates on how to protect your finances in these uncertain times.